Okay, welcome to the next part of the swing trading course. Now we get into something that has been greatly requested. Actually, everything in the swing trading course has come from just a mountain of requests. And one of the requests that I got a lot was people asking, how can I scan the market to find these trading opportunities? So here's a website that's very good for doing this, and of course there are others. You may have a favorite of yours, but this one, it's only $9 a month, and it's a nightmare to try to come up with scans for every different scanning program out there, so I'm not even going to try. It'd be just too incredibly much work to do that, and it just seems like the number never ends. So we're going to focus on just doing it for StockFetcher, and StockFetcher, like I say, is very inexpensive, and it's a good program. It has good charts, and it also has many other advantages. It's accessible to anybody. It's web-based, but it does have a option for downloading to your desktop, so if you want to do it that way, you can do that as well. One of the most important things about it, though, is that it's one of the few that will scan for both the daily and the weekly at the same time. And of course we need that because of the fractal energy that we need, and most of the scanning programs do not scan for more than one time frame, and this one does. And some of the other benefits are that the programming language, if you will, is really, really easy, very user-friendly. It's not really even a programming language. I think there must be a programming language behind what they use here. So real easy for anybody to learn and go in and change things and customize it the way you want to. And then also it's really blazingly fast. A lot of the other scanning programs I've tried are really, really slow. You know, when you got to go through 10,000 stocks or however many stocks there are these days, I've lost track. That can take a long time, and somehow this does it really, really fast. So, gosh, I remember back in the days of yore, we used to do scans and then go away for hours, and just each scan would take like an hour or two. And oh man. Now it just is incredible how far technology has come. So this is the one that we recommend. This is the one that I've created the scans for. If you want to use a different scanning program, you're welcome to take these scans and adapt it for others, but I'm not going to be customizing scans for other software. Okay, let's walk you through here in a little bit. In this course, I give you my filters. This is the front page of it. I just want to scroll down here too and show you. We're not going to use this right now, but this is StockFetcher 2.0, and you can click on this here. Okay, and you can get some information about it. So that's where you'll get your information. But if you want to see it, just go up here to these tabs. These are your main navigation tabs up here at the top. So click on SF 2.0, StockFetcher 2.0, and this will actually bring it up. Now these charts are much nicer and prettier and a little easier to work with. Just visually, they're superior to the other ones. Okay, whoops. Where are we going here? There we go. So I'll just give you a quick view of what they look like. Well, that's not a real good one. Okay, there we go. And you can put whatever indicators on here that you want. Okay, I haven't customized this chart, so this just has whatever indicators happen to be on there. But you can see, you know, what they look like. And it'll tell you what the different levels are of the indicators on there and so forth. Okay, so you can play around with that. My goal is not to teach you StockFetcher in this video, and my philosophy is that any software or websites that I refer you to or mention, they each provide their own support. So I'm not here to support those and teach you all about them. Go to those websites, go to their support department and get that from them. I'm here to support you in my trading methodology. That's what I provide support for. But since we are using StockFetcher for scans, I wanted to walk you through this a little bit and give you a little fast start on it. So if you're going to use the charts, I do recommend you use the StockFetcher 2.0. The charts are much better. Okay, now what we're going to do is we're going to go up here to My Filters. And in this course, what I've done is I've created some text files and I put them in the Members section. And actually it's one text file, and you can download that, and it has all these formulas in here. But what you're going to have to do is put them in. So the way you put them in is real simple. I've already got them in here, as you can see, but you're going to have to put them in. So what you do is click on Create New. Okay, give it a title. I have titles on all of these, so you can just copy and paste the title right in. We'll just do it so you can see. So as soon as you type in a title, the rename button will highlight, and you want to, before you do anything down here, you want to click rename. Even though you're naming it for the first time, it's still called rename. Okay, then you put your cursor down here into this field and copy and paste the formula into this field. After you do that, then you click Save. And that's it. So that's how you get your formulas in there. Put in your title, click Rename, put in the formula, and click Save. Then it'll be there, and we'll just put in some gobbledygook here. Okay, click Save, and it's going to be it. Then you can go back to My Filters. Now, let's actually look at some of these. I'm not going to look at all of them for you, but again, I just want to give you kind of a running start at this, so you don't have to start from zero and go through all of their education here in their user guide. The user guide's pretty big, so I'm going to try to make this as easy as possible for you. So after you do that, you will have all of these scans. Okay, we've got a top dog long in an uptrend, top dog short in a downtrend, rubber band long, rubber band short, symmetrical triangle long, symmetrical triangle short, descending triangle long, descending triangle short, ascending triangle long, ascending triangle short. Now we've got top dog contraction cycle longs 1 and 2. Then we've got contraction cycle short 1 and 2. And then we've got top dog double bottom long, top dog double top short, and exchange traded funds relative strength. And that's it. These down here, don't worry about it. Those are actually tests, and I don't use those. They were just different tests that I was doing as I was working on perfecting these formulas. So there's 17 of them altogether. Those are the official ones, same ones that I use. And what do I want to say about this? Okay, the couple of them are a little experimental still. The double bottom long, that one's pretty good. That one works pretty good. The double top short, that's not working perfectly right now. That gets you, that's just, StockFetcher hasn't really come up with a double top formula that I like. So I put it in there. It's more of a placeholder right now. You can try to get some matches on it if you want to and look at the charts, but this one, we're just waiting for StockFetcher to maybe come up with a double top formula that's better. Exchange traded funds relative strength, that's fine. The other ones are these contraction formulas. We've got 2 contraction cycle longs and 2 contraction cycle shorts. Again, these are good, but the difference between 1 and 2 is very small. It's basically a Bollinger Band squeeze type of formula, and a little slightly different way of approaching it with the formulas. So we're working on both of them, and they might produce, very much the same results, might be a little different. Anyway, I put it all in there just so you have it, and you can decide what you want to do with it, whether you want to keep it or not. So 17 now, a couple other comments here. This is our basic retrace in a trend type trades. Okay, these two, of course, rubber bands. Now, these triangle patterns. These triangle patterns, the triangle formulas, are based on stock fetcher formulas. So these are not normally the kind of triangles that I would look for. It doesn't tend to pull up triangles based on lower highs, in cycles, or higher lows in cycles. This particular formula tends to bring up big pattern triangles, really big. So as you look at these charts, when you pull them up, if you ever get matches on them, remember that you're not looking at the typical, from one cycle high to the next, one cycle low to the next. You got to look at the big picture. It's just a way that the function works. These triangle formulas are actually functions created by stock fetcher or some of its users or whatever. So it creates bigger patterns like that. But again, I throw it in there just for fun. As I said, the contraction ones are basically Bollinger Band squeeze. This is where we're looking for our expansion-contraction cycles. The rubber band trade ones, those work pretty well. Let's actually pull up some of these. So now we clicked on top dog long in an uptrend. Now, right now, the overall market, this is being recorded in the first half of December of 2008. So if you look at the S&P, we've been in a downtrend for quite a while. 50 MA is angling down, S&P is, in the toilet. So you're not going to find a whole lot of longs in an uptrend because the overall market is in a downtrend. And as we've said, and as we say in the manual, most stocks tend to follow the S&P 500. So you can scan for, a whole universe of stocks, but that doesn't really mean that you're getting that many potential opportunities. The truth is, most stocks tend to follow in basically the same pattern, and therefore there are not that many unique opportunities. There really are not. So I think this is one of the problems that people come up with when they think, well, if I scan the markets, then I can find a whole bunch of trading opportunities. And they do it in a fashion so that they can think, well, I'll find many trading opportunities. I can be trading every day. And that's just not the case. And it can even be a little bit dangerous because some of the individual stocks that deviate from the S&P may do so for just a short period of time based on some sort of news, earnings report, something like that, that just makes it go a little crazy, but it can be very short-lived. And so that approach can be a little dangerous. Anytime, basically, again, anytime you're trying to increase your trading frequency, you're usually asking for trouble. And that's one of the problems I've always had with scanning for stocks, is that people are usually doing it in an attempt to increase their trading frequency to find more quote-unquote opportunities, and it's not really a good way to do it. just because, again, following the major indexes is usually the best way to go. Puts the odds on your side. Okay, so if we click on this, well, we've got 0 returns. Okay, and down here you can see it says no stocks matched your filter. So we got 0. Okay, click on this one. It's searching. Okay, it found 1 down here. See how fast that was? So 1 result, and that's today's date. And if we just hover over here, a pop-up chart comes up. So you can kind of see what it looks like. Then we can click on it, and we can get a bigger view of that chart. And this purple line is your 50-period moving average. And so it basically meets the qualifications. 50 MA is angling down. Here's our stochastic. It's at the high end of the range. It's angling down. MACD, MOM is down. Now here's your weekly. Couple things to look at here. Okay, these are all these formulas for stochastic, MACD, and all that. That's all pre-programmed into these formulas, so you don't have to worry about asking what's the formula for that. It's in there. And I give you access to it. I'll show you that in a few minutes. Okay, divergence. None of these scans scan for many divergences. So this divergence, we don't actually use this. And that's this shaded blue area here, but we don't, just ignore it. We don't care about that. So what we do care about is really the green line primarily. That's 5 and 20. Okay, and that's angling down here. And then down here we get the weekly stochastic, and here we go, the weekly MOM. Okay, the green one. So, and again, we're not interested in that. And that's angling down. So weekly D is down, weekly, that's actually weekly K, and no, that's weekly D, and weekly MOM is down. Okay, so that's what that looks like. So I recommend, though, that you either pull up these charts, like I say, on StockFetcher 2.0 or on your own charting platform, because just pulling it up on these charts, I think it's a little hard to read personally. Okay, and then you just click on these and you can see it scans and none. That's how fast it goes. Boom, there's 1. Okay, so let's look at this one, Top Dog Rubber Band Short. It returned 1 result. 1 result. This is the result. It's that symbol. So you can hover over it and it'll pop up, and you can click on it. Okay, and again, it's because, you know, well, now this one's the rubber band, so we would expect the price to be above the 50 MA and the 50 MA to be angling down, and it is. And all of our indicators are lined up also angling down. Now, again, these scans are not necessarily trades. Very, very important that you understand that. These scans are meant to just give you some markets to look at. But do not think that these are automatically trade candidates, because the fact is most of them will not be. It will be a small minority of them that will be valid trade candidates. Okay. So right now, okay, let's look at this. Top Dog Double Bottom Long. See how fast it returns those? Okay, now we got 10 results down here. So now we finally get some. And again, this is what's going to happen. You know, you're going to go through periods where you get very few results, 0, 1, 2, and then that's because the S&P is kind of in a middle range. It's not at a cycle low, it's not at a cycle high. When the S&P starts making a first retrace in a trend, a second retrace in a trend, all of a sudden you're going to get tons of candidates. That's when this is going to return big numbers right around that time, within 2 days before and 2 days after the S&P comes into a valid trade setup. The rest of the time it's not going to give you much, and for reasons already stated, most markets just follow the S&P. Okay, so let's take a look at some of these. So what was this one again? Oh, double bottom. Okay, let's take a look at that. Pop it up here. Okay, so there you go. This one actually looks fairly good. So we've been, as you can see, part of what we have to watch now is, and the scan does not count waves. So we have to do that when we look at the chart. That's part of what we have to bring to it. Okay, are we extended in the downtrend? The answer is yes. Is there a double bottom here? Yes. See, the double bottom is better than the double top because the double bottom will catch these very early. The double top, it's really waiting for it to break this high, or it's actually a double top, so it's waiting for it to, the formula right now is waiting for it to break this low. That's the way it's set up, and of course that's too late for us. So this catches it pretty early, so that's what we like. So there's a nice little double bottom just starting to form. Stochastic under 20, angling up. Okay, mom is angling up on the daily. Here's your weekly. D is up. And here's your weekly mom is also up, the green line. And so that's actually good. That's a good one. Alright, let's see what other ones pop up here. I haven't looked at these. Okay, there's another one. Again, this is kind of sweet. You got a nice spike bottom reversal bar here. That looks good. That looks good. This is usually going to look pretty good because these indicators are programmed into the formulas. Candlesticks are not, although you can put candlesticks into the formulas. StockFetcher does allow you to do that. There's a little bit of a spike in volume. So that one actually looks pretty decent too. Okay, there's that one. This one just has an inside bar right now. And again, you can just hover over this, give it a quick glance, and see if you want to pull up the full chart. But the thing's pretty fast, so pretty good. Yeah, so we're finding some good candidates here on this double bottom. Okay, and then the last one I'll show you is the exchange traded funds relative strength. We're going to get into this in another video, but while we're in StockFetcher I'll show it to you. And this one will produce a lot of results. Right now the way it's based, it's got 100 results. And there's a reason for that. The reason is that really all this is measuring right now is, are these markets stronger or weaker than the S&P? But it's not giving you any technicals as far as cycle highs or cycle lows. So let's go into the formula. We'll just look at one of them. We'll do a top dog long in an uptrend. Now to look at the formula, what you have to do is click on it. See, it's highlighted in blue across the whole row. And then you want to go to Customize. Click on the Customize tab up here, and there's the formula. Now, again, I've given you access to this so that you can go in and you can change this based on your own preferences. So show stocks where the 3-day slope of the 50 MA is above 0.01. So that just means the slope of the 50 MA is angling up. Stochastic percent K is below 45 still. It's been going up for 1 day. 1 day ago, it was below 2 days ago. That's your hook. Percent K 1 day ago was below 23. Ideally, we want it below 20. I put 23 just to give it a little room. MACD fast line has been increasing for 1 day. That's mom. Now, weekly percent K has been increasing. Weekly percent D has been increasing. Weekly mom has been increasing. And then you've got your average volume over the last 90 days and the price of the stock. So you can change all of this. You might say, well, I want to trade stocks that are, trading an average of 1 million shares, not just 100,000 shares. You might say, well, I want to just look for stocks that are trading between $100. I can't afford a $100 stock. So I want to trade stocks that are trading between, $5 and $20. Well, just go in and change it. And then save filter here. So those are the obvious ones you want to change. You may want to change, I should say. The other things you might want to change is some of these parameters. This is a very, very strict formula. But I put it all in here just so you have it all. But you might want to go and take some of these things out in order to give yourself more results. So let's see here. That's good. That's good. Actually, these you all pretty much need. But here, for example, the weekly stochastic percent K, weekly stochastic percent D. You might want to take those out and say, well, I'm just going to depend on the weekly mom as my weekly filter and not percent D and percent K on the weekly. And that will give you, many, many more results in general. So that's basically it. You can see it's very simple, and this is all here for you to cut, paste, play with, and it's a great program. Highly recommend it. Enjoy.